So, welcome to our first podcast on Bunnex Investment Group. This is going to be the first of many. We just want to try several different types of content. So, in this one, we'll be actually talking the tips that I used to become a professional trader, and you can as well use them in your own way. All right, so the first thing I have actually titled it The End of Over Risking. A lot of traders are actually suffering from over risking, and they usually call it over risking, but the real name is over leveraging. It is actually a disease in most beginner traders, an infection that entices us to make it all in one trade at the expense of losing it all. We want to make everything in one trade, but what's what is it at stake? We are actually exposing ourselves to lose it all. So not only beginners suffer from this pandemic, but even the sharks do. In just one day, on September 14, 2006, as an example, Hunter and his colleagues lost 560 million. It's actually a very big story in the trading world. When they tried to regain the loss in courts over risking, they lost 6.5 billion, which led to the closure of their hedge fund. It was actually a painful phase to go through. So, in my case, I had to set rules for myself so that I can be immunized against this infection. What if I lower my risk, or what if, by lowering my leverage in the first place, so that my terminal would deny opening several trades? This was actually the end of over risking in my trading. So, as dumb as it may sound, my protection against over risking comes from a leverage of 1 to 20. No matter the trading demons whisper in my ears to open over risking lots, my terminal simply denied to fulfill them. So, long story short, to cut off the over risking demon, just lower your leverage. Lower your leverage in such a way that if the demons comes, you won't be able to open as many entries as you would want. So another problem that a lot of traders faces is over trading, opening a lot of entries within one day. But within that context, you cannot become a trader without losses under the sun. After losing one or two trades, you become distressed. So in my case, I would try to compensate for my losses. That was when I was a beginner, by opening more and more positions, each one bigger in size and volume than the previous one. The rightful term to this behavior is overtrading. So we learned the detrimental effect of overtrading from Bill Wang. He was actually a trader from Asia who made 20 billion and lost it all in 2 days. They say the faster you rise, the faster you fall. Bill Wang did not know when to stop trading. His overtrading failure became the most spectacular failures in modern financial history. No individual made so much money and lost it all quickly like Bill. So this was actually due to overtrading. When you lose, when you win, do you know when to stop and when to say, I will continue the following day? So, with this in mind, I say to myself, for if people do these things when the tree is green, what will happen when it is dry? It's actually a proverb from my Bible, a Christian Bible. I had to set my house in order. One day, one trade, 1%, win or lose. The last but not least on my list today on this podcast is overcoming FOMO, fear of missing out. So not only does this demon have negative emotional impact, but it also can cloud judgment and overshadow logic. Trading requires logic. By logic, it's actually filling in the puzzles that the markets are trying to show you. So for years, I succumbed to FOMO. Several times I would find myself asking why I enter before this candle closed. This was actually an instance when I've already been trapped. The market is not a place for hope. It took me a lot of money and time to know that I hope price goes my way phrase does not apply in trading. So my biggest question was, how do I cast out the former demon? And this worked out for me. Let's first describe the demon and its technique. The fear of missing out demon. FOMO wants you to open your trading terminal and there get an entry. It sees a buy opportunity on every fast moving bullish candle. After listing all detrimental causes, I say to myself, why not enforce a law whereby I only trade when the market gives me a primary move prior to my entry? So with this, it might be confusing. The summarized rule was, wait for the market to go up so that I can sell at this point, or wait for the market to go down so that I can buy at this point. With this technique, I managed to overcome FOMO. So what we are just trying to say is, let the market tell you what to do next. Let it move to the upside or to the downside for you to react to such a move. So basically, these were the 3 steps that helped me to actually go over risking, go over trading, and manage to overcome the fear of missing out. I understand that trading is actually a very difficult business. If I can say it's future, it's stressful, but it's highly paying. In this case, you are trying to make money against the smartest people in the world. So you need to be very smart. No reckless person will ever make money within the Forex market. And none of those over riskers will ever take money from the Forex market consistently. So what we want to achieve here is consistency. Consistency will actually require you to be smart how you are going to trade. Are you going to be able to be patient, disciplined on your trading plan, and so forth? Basically, that is all we have for today. I'll actually see you on the next one. Have a blessed day, and I wish you a perfect way to follow your trading plan.